Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And the dip buyers continued to do their best to keep the S&P 500 alive, to keep the SPY alive. Why? Because that darn 20 daily moving averages, that 20 daily moving average continued to hold as support. Okay, that around that 586 and 584 zone continued to hold as support, giving us demand, giving us buying pressure. You guys can see the wick buying pressure. We even managed to close back above the 5 daily moving average. Only one close above the 5 daily moving average, so I don't want to get too excited just yet. But that was a very nice bounce. And as you guys know, on Uncle Charles' channel, I do not do predictions. I do not go for home runs. I go for base hits, and I identify the level. And I identify the levels and the setups because I'm just looking to trade it unbiasedly. Unbiasedly, whatever the price action tells me to do. Let me give you guys an example. This is why I don't like predicting, because look at the price action yesterday. Down, up, down, up. Who can predict this? The bear bias traders and the bull bias traders are losing their mind intraday. They're losing their mind intraday, guys. That's why for me, I just play the setups. I look to get in a level-to-level move. I'll leave a runner in case the market wants to bless me with a bigger move. I'll move up my stop loss. Let me give you guys an example. Now, yesterday I was running a little bit late in my Discord, but at 7:30 in the morning, I still managed to write my general lean, and one of my general leans was about the SPY, and I wrote 590 is the equilibrium level. Okay, it's the middle level. Above is bullish, keeping yesterday's breakout intact, and below is bearish. We're just being ready for the bull case and the bear case, possibly putting SPY at risk of a false breakout if we are below 590. If above 590, then resistance are 591.5 and 593. If they clear, more upside is possible. So if we were above 590, I would have looked for calls if we cleared 591.5 and 593. Okay? And then I put, if 590 fails, 588 is my first target. 588 in play first, and then 586 and 584 in play below. Bears take full control below 584. So we're just looking to react. And look at this. Boom. Breakdown of 590 to start off the day. Look at that. 15-minute chart. Broke it down. What happened next? It hit the 588 level. Level to level move. And what happened next? What happened next? Broke down my 588 level. Treated like resistant. You guys can see that. Broke down my 588 level, treated like resistance, and smashed the 586 level, going as low as 584.6ish, bouncing around that 20 daily moving average. Okay, that was a beautiful, beautiful start to the day, and then unfortunately we had that midday afternoon chop. We recaptured 586, managed to get a little bounce up, not too much. Then we had, that was a false breakdown. Then we had a little false breakout right here, where we managed to get a drop back to the downside, smashing 586 again. See, this the midday chop is very difficult. And how do you trade chops? You just trade with the traps. False breakout, false breakdown, look to get in, get out until the break of the chop range. Okay, because when you're trading within a chop, it's very trappy. You want to get in, get out quick. But once we had that afternoon chop, once we had a few hours of consolidation, I did update the group in my Discord. And I wrote, once again, we're getting the boring afternoon chop. But the final hours of the day approaching. From here, 586 to 588 has been the chop range. Watch for the break of the range. If 588 clears, 590 plus in play. If 586 fails, 584 in play. And from there, we just had to be patient. We wait for the setup. And look what happened at the end of the day. Around 3 o'clock, we cleared 588. Smash 5. We went to 590 plus. So again, we're not predicting. We're not acting like we can see the future with our imaginary crystal balls. We are identifying the levels and we know the setups beforehand, and then we look to react to it in real time. So we know the 590 level was support. We look to short if it breaks down, or short if it breaks down 588. And we play it level to level because look at this price action. Imagine you shorted the breakdown of 590 and you didn't play it level to level. You just kept holding, thinking you're Ron Walker or something, thinking you're Michael Burry or something, trying to catch the crash. And then it hits that level and you're up $50, you're up $150, you're up $1,500 only for the market to reverse on you. Next thing you know, you're red. Do you like that feeling? If you don't like that feeling, you guys got to learn to trade it level to level style, sheep style. Sheep style, baby. Look at that, level. It works. It works. It only works if you work. A lot of people, they just want the get rich scheme. They don't want to work. They just want easy, quick money. Okay, that's why 90+% of retail traders lose, because they have the wrong approach. But if you're willing to work, sheep style trading will work for you. It works when you work. TA, PA, analysis, they work when you work. Does that make sense? So let's get to the charts, guys. Let's get to the charts. We got the bounce off the 20 daily moving average. Okay, we closed above the 5 daily moving average. We recaptured that 590 level. Okay, awesome. What next? Well, as long as above 590, we can end that chop fest that we had this past week. Okay, you guys see it? Maybe we can get a gap up, give us a bullish island reversal, because it's trying to gap up right now. But either way, above 590 is bullish. 591.5 and 593 are the next resistant levels. If they clear, we are bullish, guys. You want to look to long when the price action is acting bullishly. With 595, 598, the big 600 all in play. But the only way for the upside to be possible, we stay above 590. We clear 591.5 and 593. You want to look to long, similar to how I show you on the 15-minute chart. This is how I trade intraday every day. Doesn't always work. It does not always work. You got to have risk management. You got to be cool with being wrong sometimes. Now, my trading strategy, I believe you're going to be right more than wrong. But you can be more right than wrong. But because you don't have good risk management, the few times when you do get wrong, you can blow your whole account. You can be right 10 times in a row. But if you don't have good risk management, that one bad trade can cost you your whole account. So pay the bills, keep the lights on, and respect your stop loss, guys. But overall, I'm going to be bullish above 590, and I will look to long when those resistant levels that I mentioned clear. If we're going to go short, then we need to break down 590. We need to break down 588. We need to break down 586. And we certainly need to break down the 20 daily moving average. It's sloping up. I do have support also around 484. That's been a demand zone as well. So we break down those supports. 590, 588, 586, 584. Below 584, I will definitely be bear biased. Okay, guys? We want to be ready for the bull case scenario or the bear case scenario. Stop trading biasly. You are screwing yourself over. You're not optimizing your trading opportunities. You can make money to the upside and to the downside. The bill collectors, okay, the people that want you to pay the electric bill and the heating bill, they do not care if you made your money bullishly or bearishly. They only care if you got the money to pay the bill. So let's get the money. Let's get the money. Green P&Ls all day for the rest of our lives, baby. Okay? Above 590, stay bullish. Clear 591.5 and 593. You want to look to long. Below 590 and 588, you want to look to short with 586 and 584 in play. Below 584, bears are in full control, at least all the way down to the 578 level. That is my trading plan. They are not predictions. They are just levels. Now it's on us, similar how I show you guys on the 15-minute chart, to follow what the price action is going to do. Right now, it wants to clear that 591.5 level. Clear that level on the 15-minute chart. Clear 593 on the 15-minute chart. That's when you want to look to long. If we break down any of those levels I mentioned on the 15-minute chart, or higher, okay, you can use 5 minutes and 2-minute charts for entry, but you don't want to confirm any breakouts or breakdowns unless it's on the 15-minute chart or higher. Okay, even the 15-minute chart can be tricky sometimes, a lot of times. But I'm trying to go as low as possible, okay, without going to a time frame that's going to be too, fakey. Fake us out a lot. You get a lot of fake outs on the 5-minute, 2-minute, 1-minute chart. 15-minute chart you can, but it's less. Okay, 15-minute is the lowest I go for time frames or higher. If I had it my way, everybody would be trading 30-minute time frame or higher, 15-minute, 1 hour time frame. Those are my favorite intraday time frames. 15-minute, 30-minute, 1 hour for intraday trading. Daily chart trading, 4 hour, 2 days, 1 week, those are good for swing trading. Does that make sense, guys? They take longer to play out. All right? And I don't know. I'm not trying to gatekeep my trading style to you guys. I don't gatekeep my levels. The same levels that I used to trade in my own trade and with my Discord members, I give it to you guys, right? Look how beautiful they work. You guys watch my videos almost every day. How often do you see my trading strategy work versus it not working? Are there times when it doesn't work? Absolutely. But at the end of the day, it all depends on the individual trader. A sword is not a great sword because it's a sword. It's a great sword because of the wielder. Does that make sense? So I'm not saying my trading strategy is the best trading strategy in the world. I think it's great for me based on my personality. Does that make sense? And I hope that it's great for you based on your personality. All right? So let's move on to triple Q because I'm starting to blab over here. I believe the chop range ends bullishly if triple Q can clear 504 and 505.5. Those are the new levels, okay? If we clear 504 and 505.5, I would look to long with 508, 510, and 512 in play. I would overall be bullish above 504 and 505.5. I'm not going to get bearish or favor of, going back to the bottom of the chop range unless we break down support starting with 502, 500, and 497.5. Yes. 500, 502, 500, and 497.5. The same way I show you on the 15-minute chart for SPY, we use it on the same as on triple Q with the levels that I give you guys. Okay, look to short if 504 or 502 and 500 fails. With 497.5, you play it level to level, leave runners, and if we break down 497.5, let your runners catch it. You guys focus on the base hits, and you let your runners go for the home runs. All right. So you got the bull case and the bear case. Okay, look to short below 502 and 500. Look to long above 504 and 505.5. Tesla, we have a double inside. This is very important, guys. For those who love charts, chartings, and believe in price action analysis and technical analysis, you believe in that. It's very important right now. Okay, this is not a prediction. It's not political advice or any of that. It's just based on what I'm seeing on the charts and what I've seen in the past when stuff like this happened. We have a double inside candle setup. Now I've told you guys in the past that inside candle setups is an indicator of chop, right? The market's consolidating, right? Remember the two phases. The market goes into the trend phase. There's the trend phase, and then it goes into the chop phase where it flags or it's a channel, whatever the chop phase wants to do. But right now we have a double inside candle setup. You see this candle, yesterday's candle is within the range of Tuesday's candle. And Tuesday's candle is within the range of Monday's candle. Okay? I'm expecting, based on this setup, now I could be wrong, and if I'm wrong, I will acknowledge it in my next video. But what I am expecting is that today or tomorrow, either today or tomorrow, that we're going to get an explosive move from Tesla. Explosive. Okay, it could be to the upside, obviously. It could be to the downside, right? I don't know where it's going to go. But what I do know is the levels, the pivot levels that I'll be watching. Because I'll tell you this. If the plan is to the downside, and I will be ready. If Tesla breaks down 340 and 338, I will look to short. I'm playing level to level, 336 and 334 in play first. And below 334, 332, and 330 is very, very bearish. I would be bear bias below 330. Okay, that's something worth swinging if we break down those levels. Okay, we get a good position. But definitely, I would look to short below 340 and 338, and I would play it level to level and swing the runners. Now, if the plan is to the upside, bulls do have a lot of work they need to do. 342, 344, 346, and 348 are resistant levels. $2 increments. And I do believe it will be explosive. I just don't know if it's going to go up or down. But if it does go up, I want to see those resistant levels clear. And above 348, Uncle Charters will be bull bias. Guys, listen to me. I don't know where the market is going to go for Tesla. But like I'm trying to tell you, either today or tomorrow, the move is going to be explosive. And all we need to know, just like I tell you to watch on the 15-minute chart, all we need to know is the levels and the setups. And when the setup triggers, when the setup signals, we enter that position, we play it level to level, we get the hell in, we get the hell out, we leave a runner to just leave a little skin in the game to see how much the move is going to move. Is it going to be explosive? I believe so. So I'm stressing out right now because I don't want you guys to miss it. Uncle Charters this year has made some incredible plays with Tesla. Okay? I just want you guys to catch it too, and I hope you do, because woo, it was a lot of money. Okay, are we clear on what to do on Tesla? Hopefully we're clear. NVDA reported earnings yesterday, but overall, I mean, it's around 144.9 right now, still around the same area it's been. And once again, supports at 144 and 142. Can't go short unless those support levels fail to put 140, 138 or lower in play. Now, if we're going to put a bottom in, once again, 146 must clear, 147.4 must clear, and 149 must clear. I will feel comfortable saying a bottom is in when we finally clear that 149 fib level. Holy moly. IWM trying to go for a bounce here. If it can stay above 232, then 234 and 236 is in play. Yeah, possible bottom is in is if 234 and 236 clears. Otherwise, look to short if 230 and 228 fails. Especially below 228, I would favor the gap fill, which is around 224-ish. All right. Apple finally cleared that 228.4 fib level. If it can stay above 228.4, I will be bullish on Apple. And if it can clear 230, that will definitely be bullish follow through, because that 230 level has been tough. But if it can clear, bullish follow through. RSI is not overbought, okay? Do not look to short unless we get a false breakout. That means we need 228.4 to fail. And if it does, look to short with 227 in play first. Then 225, 223, and 221.5 all back in play. Amazon trying to go for a bounce, but it does have an inside candle here. I can't favor more upside unless it stay above 203. Clear 204.5. 204.7, excuse me. Clear 204.7 to put 206, 207.3, and 209 all in play. All right. Otherwise, if we break down 203 and 201, we're definitely heading back down to 199 and possibly even lower this time. Meta went for the bounce, showed a little bit of continuation. As long as above 562, bulls have a shot at more upside. Next resistance is at 568. And if it clear, a back test of the 50 DMA will definitely be in play. It's around 571.3-ish. So clear 570 and the 50 DMA at 571.3-ish. We'll possibly go ahead and test the 20 DMA around 574 with 576 in the fib level at 577.6 above. One level at a time, guys. Now, if we're going to be bearish, 567, 565, 563.5, and 562 all must fail as support. I will switch back to bearish below 562. Microsoft, there's a couple of bounces off that. You see this white line? That's around the 410.5 level. So this couple of times you got buying pressure there. Could be a double bottom. We'll see. But I'll be more comfortable talking about that double bottom and being bullish if 417 and 418.7 can finally clear. Been getting some selling pressure around that area. But if it can finally clear, some type of short-term bottom could be in and pushes up to 420, 422 or higher. Okay, guys? If yesterday was just a dead cat bounce because we did get some buying pressure from the area, then once again, support levels must fail. 415, 413.5, 412, and of course 410.5. breaking down for 10.5 would cancel the potential double bottom and send us a lot lower on Microsoft. All right, let's get away from the stocks. Let's look at the DXY here. I did have a fib level from November 14th high down to, what did I got there? November 19th low. Okay, we got some shorter term levels to watch. Okay, I got 106.7 and it's trying to clear it right now. And as long as above 106.860 and 107 are both in play, above 107, I would definitely favor more upside. I can't favor some pullback unless 106.588 and 106.475 can break down. And that should send us down to 106 and below 106. I would favor 105.5-ish, 105.1 zone around that area to be tested. And below it, I would definitely be bear bias, okay? Coin had a little bit of a pullback yesterday, but we are gapping up here. And next resistance is on 329. Next resistance at 330, 331.5, 333, and 335. All those levels must clear for the new all-time high. I mean, play it level to level and do it with runners. This is a very volatile stock, so please be careful. It's not beginner friendly, but if you got some experience and you got some cojones, definitely give this a shot. Coin is fucking awesome. Downside, upside, doesn't matter. But I do have support at 328. So in case there is a bear setup, support at 328 must fail. And that will put 326, 324, 322, and 320 all in play. I would definitely be bear bias for the short term below 322. Okay. DOGE is consolidating. Now this is a 4-hour chart. I had to see what structure DOGE was building up here in this consolidation. It was building a triangle pattern in my opinion. And I tell you this, it's getting tighter, which means I believe as long as above 38 cents, we could get an explosive move up higher, 40 cents, 44 cents, and the big 50 cents. But it has to stay above 38 cents because with the range getting tighter, if we break down 38 cents, that's going to be nasty. Okay, we could get some type of lopsided, imperfect looking M pattern playing out on DOGE. And if it does, I'm going to be getting out of my position. I like trading shares. I don't have to worry about time decay or nothing like that. But you still got to follow the price action, okay? We lose 38 cents. That could be a red flag. I would probably take profit if we lose 38 cents, guys. Yeah. But as long as above, I'm bullish. And I do favor 40 cents, 44, and 50 cents being tested. Bitcoin, it's still going up, baby. Managed to clear that fib level yesterday, 93.3 thousand. We cleared it yesterday. It's leading to more upside. Working its way towards my 98.6 thousand level, which is a 200% fib level. If that clears, guys, the legendary big 100,000 is going to be in play, okay? Do not call a top or favor any downside or cut your longs. Unless we start breaking down support. I don't know where you guys got your stop losses at, but I do have support at 95.6 thousand and 93.3 thousand. I can't favor a pullback unless both those levels fail. Otherwise, if 98.6 thousand clears, $100,000, baby. Anyways, thank you guys so much for watching. I hope you guys like price action trading. I hope you guys want to be sheeps with me instead of being those buyers, bears, and bulls. You can be a wolf, you know what I mean? Wolves are cool, sheepdogs are cool. You know what I mean? It's just those bulls, bears, and pigs. Not a fan of them. Anyways, you guys have a great day. Peace.